Rebecca?
Absolutely. All right, guys. Welcome to the Problems or Profits Wednesday webinar. We've got a good webinar for you guys today. We're going to be talking about the hot real estate market. So just to tell you guys a little bit about myself. So if this is your first time joining us, or maybe you've come on for a few of these webinars like our man Jordy over here, we're talking about different topics every single week, as well as presenting on all of our off-market deals. So my role is I dispo all of the deals. So I get to market and talk to all of our real estate investors whenever we have off-market deals. So I work for and with Adam Martin here on the call, and we have a full-time team of real estate wholesalers all across Ontario. So these wholesalers are out there hustling on a day-to-day, finding fantastic off-market deals. And whenever we find properties that don't fit our portfolio, we assign them to other investors in our network. So we have a large pool of investors that we work with all across Ontario, roughly 4,000 to 5,000 people on our direct buyers list. And if you're not already on the buyers list, make sure that you sign up to it. So that link will be sent out after today's webinar. We also have off-market cottage deals. So not only are we in the kind of city space and residential space, but we're also in cottage country. So this is a fantastic time of year to actually start to invest in cottages, because right now in the current state with COVID, there's a huge opportunity to get into the market into specifically cottage deals. And it's going to be really talking about the hot market today, really hot this summer. Everyone has changed their travel plans, and there's not as much hype around international travel right now. So that means that people are actually staying in country and doing their travel here at home. So there's a ton of opportunities for short-term rentals, flips, any sort of investment in that region. So off to a great start here with the cottage business for wholesaling. We actually have one of the deals on the webinar tonight, and we just assigned another one last webinar actually. So really exciting to be talking about those deals. And we're going to be following up with you guys about those deals at the very end of today's webinar, after we talk a little bit about the hot real estate market. Now, I am joined by my co-host here, adamjdmartin. So Adam actually runs our wholesale business. So it got to 7 figures last night, and we're really aiming to expand to an 8-figure wholesale company this year. So it's the largest and certainly the fastest growing company here in Canada. So Adam has a wealth of knowledge when it comes to real estate investing. He's done everything from creative VTB deals, house hacking, Airbnb flips, student rentals. And last year alone, he wrote over 1,000 offers as a real estate investing company. He's also a mortgage agent and an educator on Cashflow Tribe, which is a real estate investing network and education company. So if you guys aren't already on Cashflow Tribe, make sure you check it out. So Adam, why don't you fill us in a little bit more about yourself?
Yeah, hey guys, thanks for tuning back in again for another Wednesday Problems or Profits webinar night. This one tonight is about something that is kind of the elephant in the room right now, which is just this crazy market that we're seeing. I'm looking at updates all over the place from various cities. Tonight, I'll be mostly talking about London because that's where I live and that's where I've got easy access to a lot of the data. So, looking around at everything that's going on, this is a crazy time in real estate's history. This is certainly the craziest time since I've been involved. So I've been investing in real estate now for the last 3 years and working very closely with Matt McKeever. During that time, with Matt's mentorship, I've been able to really learn and embrace a lot of various strategies. So, I've had 3 Airbnbs, I've had multifamily, I've had single family, I've house hacked houses, done student rentals, I've owned student rentals and managed them. I've been able to do quite a bit in this space. I've done some creative financing. I've done I've done options to purchase. Like I've actually done quite a bit. And then of course over the last 3 years, we've built up this wholesaling business, which has become, it's probably the biggest in the country at this point, and quickly growing as well as we continue to add people. So yeah, we've done a lot of business in the private space, and we've done a lot of business at interesting times in our market and the market cycles. When we first started the wholesaling business, the market was at the top, right? It was the hottest it had ever been where we were operating in here in London. And that's often one of the biggest challenges people will cite, like, well, how do you wholesale houses? Or how, as an investor, do you buy houses at under market value when the market is so hot, right? Aren't most people going to want to list their house and get the top dollar on the market? Yeah, lots of people are going to want to do that. And there's going to be a lot of competition at all levels of real estate. And what you're going to continue to see, I think, is a low amount of inventory, a low amount of supply, and a continued demand. And all that's going to do is continue driving up the prices. And that's okay, right? That's not the end of the world. In fact, that's actually very beneficial for most of us, because your existing portfolio is going to gain more value, okay, providing you with more equity. And your new purchases, if you're able to get them at decent prices, are going to allow you to get very strong refinances or very strong sales. Okay. The other thing that's happening as well, as you see the market continue to appreciate in the way that it is, as that supply stays low, demand stays high. One of the things that's going to happen as sort of a bullwhip effect here is that when we see the purchase prices exceed the affordability of the average Canadian, something's got to happen there, right? Because the demand for the houses is not likely to change. So what's probable to happen is you'll see the rents go up, okay? Because more people, if they're unable to actually purchase those buildings, people like us, investors like us, are going to come in, purchase those properties because we have access to B lenders, private lenders, equity, and other sources of income that the average Canadian doesn't have. And that's going to allow us to gain access to the supply, but it's going to price some people out. And when that happens, you're going to see those rents creep up. Okay, so it's actually a really interesting time for anybody to be in this market. And I had thought that, we were at a very high point here in 2018 and 2019 when I bought my first properties here in London. And that was the highest London had ever been in terms of value. And now we're seeing absolutely massive, like just tremendous amounts of appreciation. The London St. Thomas Association of Realtors, so LSTAR, which is kind of like the real estate board here, has just reported that in January 2021, the jurisdiction of LSTAR, so London, St. Thomas, and this general area, sat at $607,000 for the average house. Okay, so that price is astronomical when we look back just 5 years, okay, or 10 years. That's double. It's well over double. And so when we're looking at these numbers and we're thinking about some of the other pieces of the stats here, so we're seeing as well, there was a 5% increase, in like a month, and then they're looking at a 0.8 months of inventory across all of LSTAR, which means that there's 80% of a month's worth of sales in actual houses in supply that are available for sale. And then the listing to sale ratio was over 80%. It was like 85%. So if you list, you're selling your house almost guaranteed, and you're selling with massive amounts of appreciation. So what this is turning into is really like all out war for the properties that are on the market. And I've actually personally witnessed a lot of this over the last week or two, as I've sold actually all of my properties. So that's kind of something interesting that I've been talking to people about, is like, why did you sell now? Well, for me, I'd kind of added all the value I could to the properties that I had. So it made a lot of sense for me to sell, get liquid, and then be ready, agile, and super competitive for this new market that we're in, to be able to capitalize on any good deals that I do come across. Okay, so with our wholesaling company, we've sent out just under 1 million. I think we're at 900,000 or something like that flyers for this year. So, that attracts a ton of leads to us. We've had about 1,800 calls inbound from private sales. So for me, what I'm doing right now is I'm getting all the troops together. I've added as much value as I could to the buildings that I had. So I knew there wasn't really much left for me there other than the natural appreciation that we're experiencing. But if I got liquid right now, as I did, as soon as all these houses sell, I've got all that equity that comes back to me in cash. And then my primary residence as well is sold, which I'm going to, get tax-free income from. So when I take all of that in a lump sum, now I can actually go, if I wanted to, and purchase a building that is potentially a private deal or even an on-market deal that I can get at a decent price that needs the strategic renovations. Okay, this is the perfect time to look for properties where you can replace the bathroom, flooring, kitchen cabinets, lighting, landscaping, all those good strategic renovations that we're always talking about. Those are guaranteed right now, essentially guaranteed to get you a great return. Because if you can get into a property that doesn't have those things done, the market is racing. Okay, and when the market races like this, it's actually very exciting because it allows you to be pretty blundersome. You can go in and make mistakes, right? So that's actually how I made a lot of my money in real estate, was just making making mistake after mistake after mistake, benefiting from the market keeping up to me, making stupid mistakes. It was actually a beautiful time to learn in real estate over the last couple of years. But I would say that right now is also a fantastic time to learn, because as you're getting in, you can afford to have those construction mistakes where, it's going to take a month longer. So maybe this project's going to cost $4,000 more than I thought. Or you open up the walls and you find out that there's some shoddy wiring that you think you should replace in order to do the appropriate renovation. And all of a sudden you're rewiring the house for $20,000, right? This market is very forgiving for that type of stuff. So one of the reasons for this topic tonight was to really encourage people to be bold in this time, right? You're seeing those prices go up. You're seeing a really hot market. You're seeing a lack of supply. That's why we have companies like mine. And I'm not the only one doing this, right? There's lots of companies out there, or lots of people that you could buy off market deals from. I encourage you to buy deals from anybody that you could get a good deal from right now, because this is such a fantastic time to get in and ride this. Now, other side of this coin is, how long does this last? Okay. How long can you continue unchecked to go and experience rampant appreciation? I don't know. I don't know how long you can do that. So there is an element here of timing. Now, how short the window is, it's very, very hard to tell. If I had to guess, I don't think you'll see more than 24 months of this type of crazy stuff. So my best guess is probably somewhere 12 to 24, and somewhere inside of there, there's more than likely some kind of, somebody's got to pay, right? For every action, there's an equal and opposite reaction. And I'm pretty sure that's how this market works. So at some point, we're going to figure out that either we can't continue the amount of stimulus that we've got, okay, which means driving those mortgage rates down to the level that they're at right now. I just read right before we started this, an advertised rate for 1.3%. Okay, 1.3%. Okay, inflation is more than that. So that doesn't make any sense. Like, it literally, that number's not real. And so at some point, people are going to have to catch up to that number. Now, some people will say, yeah, but we've got all of the mortgage qualification things that you have to go through. Sure. Okay, as a mortgage agent, I just laugh at that, because yeah, sure, we're kind of qualifying you based on having prime plus whatever. I'm probably the worst mortgage agent ever, because I don't even know these numbers. So don't come to me for mortgages. But we'll qualify you at like prime plus whatever, like +1 or something, and you end up qualifying at like 2.5%. But the reality is that nobody ever maintains their level of spending. Okay, so these qualifications, these little tricks that we do to be like, oh, they can afford this, it's not true. Okay, because the minute you get the mortgage, you then get offered a line of credit, right? Or you get offered an auto loan, or you get offered a loan on some cool thing. And oh my God, look, RVs and like ATVs and snowmobiles are all the rage now because domestic travel is going to be huge, right? Why not get the boat this year? Why not get the Sea-Doo? We're not going to be able to travel. And so you justify spending all these other things monthly. And that is exactly how the average Canadian finds themselves out of like underwater. And when these mortgage rates change again, well, there's going to be a change of regime here on who's going to be able to hold on to these houses. And guess what? That is also going to be the next best time for everybody on this call that's interested in buying real estate. If anybody is not quite yet at the level of real estate understanding or maturity, that's okay. To understand that we actually make really great money, whether the market's rising in the way that it is or whether it's falling. Okay, so if you're not quite there yet in your investing maturity, that's no problem. That takes a little bit of time. Jump over to platforms like Cashflow Tribe. Okay, Cashflow Tribe's a really great platform where you guys can nail the strategy. You can absolutely nail it down on there and connect with lots of other investors and service providers. That's a great platform to learn all this stuff. On this particular series of webinars, we're just here to sort of expose and have a conversation with anybody that wants to listen. But certainly you guys want to get to that level where you understand how to make money in a rising or a falling market. And I can guarantee you I will be, and Rebecca will be, and Deanna will be, Jordy will be, I know that. Okay. I know these guys are all making money, whether the market's rising or falling. So I would encourage you guys to get to that point. So I'd love if you guys want to throw any questions in the chat. Yeah, cash flow's superb. So Randy, if you want to elaborate there about what you want to cover with cash flow, we can talk about cash flow for sure. Oh, do you just mean the website? Yeah, Cashflow Tribe. Cashflowtribe.com. So yeah, does anybody have any questions so far about our chat tonight? It'd be cool to just have this be a discussion where people chime in and we can talk. Like maybe some people don't believe that now's a good time to buy. I would love if somebody has that question, let's get that debunked or answer that. Or if you guys are thinking maybe it's stupid that I sold my properties now instead of in 3 months. Well, you're actually right. I probably should have waited, but it was time to go. So do I think a crash is coming? So yeah, like this is what I'm talking about. I don't think this can last forever. The way that the money is being held at what I would consider artificially low rates, like 1.3% is not something that's sustainable in my opinion. So, and again, this is like one kid's opinion. So don't sell the farm on my words, but talk to some other people that know better than me. But in terms of a crash, like I don't really know what crash means, but at the same time, I think at a certain point, somebody's going to have to wake up and realize that the affordability of the average Canadian just won't be there after certain prices. Okay. After a certain point, the average Canadian just simply cannot afford to go beyond that. So you can look at something like Toronto. Can Toronto stay at that level of purchase price forever? The only way that it's possible is if they continue to get a lot of immigration of money and people that can afford to be there. Okay, that's the only way. There's no way. And the other sort of caveat is density, right? They continue to build up, and continuing to build up does increase the supply and can, in fact, lower the prices of the average house. But there's a reason that all of the communities around Toronto and that little golden horseshoe have become so much more populated, and why the purchase prices have been diffused across those larger cities like Kitchener, Waterloo, Mississauga, Etobicoke, Scarborough, all those places. It's because the affordability is just not there in like downtown Toronto. So yeah, that's something real. So the way I see it, if you're living in a city like London, where I am right now, the only way that we can sustain this type of growth is if we're also seeing a trend where people are leaving Toronto and migrating with their equity down to London. Okay, that's the only way I can see this being even mildly sustainable. And if that's the case, then yeah, maybe these new prices that we're seeing today are sort of the new floor price, right? But that's not to say that it won't fluctuate at any given time. So this could be the new floor price because maybe people are. And we have to look at the other sort of social, economic, and demographics and and just what's going on in the world right now. Like maybe some people are moving out of Toronto to get into a place like London where you can say, oh man, it's Forest City, right? There's parks, there's all this space. If you buy a house, you actually get a huge lot. Okay, my house that I'm sitting in right now has got a 240-foot lot. Okay, that's impossible in Toronto. You would just die if you had that, right? So maybe that is the case. Maybe there are people coming here specifically for that type of living arrangement where they actually have more space. They're a little bit outside of the city and maybe a little bit further away from some of the COVID restrictions and stuff. So that's completely possible. And if that's happening, yes, this may be the new floor price. But what does that do to everybody else in London? Did the London natives, did they all of a sudden earn more money because more people came from Toronto? Well, maybe there are some tangential businesses that open up. Maybe it increases the velocity of the money churning in London, but not to the degree that we can increase the purchase price of a house by 25, 35, 100%. Okay, that's not possible, not that fast. Okay, it's going to take way longer for wages to catch up than what we're seeing right now that's happening in terms of natural appreciation. So that is going to be a big problem. So what that means is we now have to draw the conclusion if the native Londoner can't afford a house, they have to rent. Okay. Now we're getting into one of these circumstances more like maybe Waterloo, where you're seeing $600,000, $700,000, $800,000, $900,000 houses, but they only rent for $2,500 or $3,000 a month. Okay. Now, if you guys are familiar with the 1% rule, very difficult to achieve today. But if you're familiar with the 1% rule, you can see that if you get your revenue to equal somewhere between 0.8 to 1% of your purchase price, okay, so a $100,000 house should rent for $1,000. If you get somewhere around there, you've got very strong cash flow and strong incentives to hold on to properties as an investor. But when you start seeing these properties that you can only rent out for $2,200, but they cost $800,000 to own, that's a tricky situation. Okay, because your cost of ownership is likely to exceed that revenue that you're generating. And at that point, what's my incentive? Am I just now betting on the appreciation continuing? Well, that's a scary bet because that looks like speculation, and speculation looks like gambling, and gambling looks like something we do with our disposable income that we're counting as a loss, right? That's what you do at the casino when you're like, I'm going to put 100 on red and see what happens. Right? Like that's the same sort of thing when we start getting into a speculation market, which some people often refer to as the greater fool, right? Who's actually going to be the greater fool and buy this thing from me? So I guess there's a lot to unpack here. Main takeaways before Rebecca transitions into some of the deals and stuff is like, I actually think this is still a beautiful time to buy because anybody that can get into a deal, okay, a property that is actually not going into like multiple bids on the market, deals that aren't going like hundreds of thousands of dollars over asking, this is a great time to get in and benefit from all those brand new comparables that you're going to have. Okay, you will never see, at least right now, and especially in my market, there has never been such incredible comparable sales. Okay, there has never been such amazing opportunity to refinance some of your existing portfolio and leverage that into a new building that you can get into and get out of, or get into and BRRRR. Okay, the BRRRR method looks like buying it, okay, renovating it, renting it out at a new high value rent, and then refinancing that property to capture back most of your investment, if not all of it at this point. It's got to be all of it at this point. Okay, because if you get a comparable that sells beside you for $800,000 or something, and you've bought the house for $500,000 and replaced everything, that full gut probably only cost you $100,000. But if you're then able to go get a mortgage for $800,000 and get 80% of that back, okay, all of a sudden you're actually going to get all your money back plus a surplus to have done all of that work. And then you'll have the high new rents that people are willing to pay. And don't forget that as these house prices continue to rise, you will see the rent do that. It's just, it takes a little bit longer to catch up. Okay. But the more and more house prices rise, the less people can actually afford to buy them. And that's when they have to rent. Okay. And the less supply of rentals you get, the more price goes up on that degree as well. So as an investor, this is maybe one of the most beautiful times to buy, even though it's slightly counterintuitive. Okay, I know people, oh, bro, you got to buy low, sell high. Yeah, I get it. Okay, I understand that. But where's high? What's the top? Where's the peak? When does it fall? We don't know that. So are we going to sit and wait forever? If you do, there's probably a large opportunity cost associated with that. Okay, so that's one of the things that we really want to watch out for here is what is the opportunity cost of not moving quickly right now? Okay, so that's probably one of the things you should just leave this talk with is like just move really fast right now. Now, little word of advice here, you're going to have to be really competitive if you're going to be on market. That's why companies like mine are actually really doing well right now with off-market real estate, is because we're able to go in, pre-negotiate the contract, get that contract tied up, and then give it to you guys at a set rate. Okay, an actual flat fee, which is fantastic because then you know exactly what you're getting. Because the worst thing that real estate agents do, this is honestly it's the craziest shit that they do this, but it works really well, so I can't blame them. But they post a goddamn listing for $699, knowing full well that they want $850 and nothing less, right? So what that does is it inspires multiple offers, and it's great for drawing in attention. But the worst thing is you never can actually tell whether a listing is within your affordability or not because of these different pricing strategies that they use. Okay, so in the last week, I've put out, I think I'm up to 8 now. I've put out 8 completely firm offers, okay, with complete like cover letters that say I am flexible on anything. I can close in 4 days. I can close in 7 days. I can close in 3 months. I can close whenever the hell you want. Fully, no conditions at all. I don't even need to see the house. And I've been putting no walkthroughs, nothing, no inspection, no financing, absolutely nothing on houses that I'm considering for my primary residence. I'm like, if you send me a photo of the layout, I will buy it because I can read the blueprint. And if I like the layout, I'm sold. Okay, absolutely nothing. Half of them I didn't get emails back on. And the ones that I did were, oh yeah, we sold 200 over asking or 150 over asking. Okay, thank you for that. Thank you for that pricing strategy. That worked really well. But these prices too are insane. Okay, I'm not talking at the $300,000 level. Okay, all the offers that I've been making started with 8s or 9s. Okay, 800,000, 900,000 in London. Okay, London. It's that shitty place on the 401 that you guys drive by and don't stop at. Okay, it's not where you should be getting multiples at 8 and 900,000 price range. That should be literally close to the top of the market. And it's my understanding as well that at the actual top of our market, which is like the 1.3 to 1.5 range, there's multiples there. So first of all, I don't know where all this money's coming from. That's like crazy to me. I guess it has to generally be Toronto or something like that. But you know, you have to be so competitive right now to actually compete. So my words is if you're going to be on market, do your best to work with your power team. Okay. Work with your mortgage agent, work with your real estate agent, work with everybody that you need to be able to make the most competitive offer you can. Okay. Not everybody can go in totally firm the way I've been doing, but honestly, the less that's showing up on your offer right now is probably better. Okay, simple due diligence clause or a simple, if it's financing, maybe just tighten up that window. Okay, we always do 3 weeks of financing conditions. That's a lot. That's a crazy amount on a private deal. On market right now, I would be shocked. I would be shocked if you could get away with more than a week or something like that. So yeah, this is my sort of rant on today's market. And I think the whole point of it, whether or not it's coming across, is like, this is a beautiful time to buy. It's just, you got to be super competitive. You got to move really fast and work very closely with your power team so that you can actually go in and make really competitive offers and know that you're qualified for that financing. Okay. Another thing I've been saying lately is like, this is not the time to quit your job. This is not the time to buy the car or do something that hurts your credit score. Okay. Maintain a high credit score right now, maintain employment right now so you can get that financing and just hammer these cheap mortgages and get in and get out. I think that's the way.
Absolutely. We've got a few fantastic questions coming in here, Adam. So let's go through and filter through some of these questions here. So Iram, you've had your hand up for a little bit. So why don't you unmute yourself and go ahead and ask your question.
Mama? Hey guys, thank you so much for taking my question. My name is Iram and I'm a realtor out of Hamilton. So I just had a question about what you guys were just mentioning about maybe selling off some of our portfolio. I just wanted to know, what are your thoughts on selling something versus refinancing? Because I'm going back to what Adam was saying about mortgages. Getting rental, right? At 100,000 mortgage or property should net 1,000 or gross 1,000 in rental income. I have a property right now that's I could probably get 9 for it, but I'm only getting about, even market rent is only 2,500. So I'm not seeing if it's really worth it or not, but I just thought I'd put it out there to you guys and see what you think. Thank you so much.
Yeah, no problem, Miriam. So I've got a lot of different thoughts about this. And honestly, to really answer that question, we would have to know more about your personal situation. But as a generalization, would I rather refi or would I rather sell? Couple considerations there. One of the considerations I would make is something I've already kind of talked about and touched on tonight is the building in a condition in which you could go in and do some simple renovations now that would really increase the price? So maybe you could replace or retile the bathroom and kitchen and flooring and paint. And if those things haven't already been done, I would consider doing those renovations and then listing at some absurd price. Okay, list it at like something ridiculous that you think nobody might pay. And if you get any offers on that are good offers, that's a huge opportunity for you to sell at a great price while taking advantage of those strategic renovations. Because often, when you do things like flooring, bathroom, kitchen updates, they cost a lot less than what you actually get paid for when somebody values those renovations. So that's one thing. The other thing is, when we're thinking about the refinance, we have to think about, when you initially got that property, what was your financial situation like? And what is it like today? So if you sold that property today, how much equity would you be benefiting from capturing? Okay. And then just thinking, if you went to do the refi, you're going to have to actually qualify to refinance the mortgage at that 900 price. So if your income and your credit is not good enough to do that, then you're going to have a challenge getting back a lot of that money. And at the very best, you're only going to get 75 to 80% of it. Okay. Right now, a lot of banks, a lot of companies are only doing 75% refis. So while that is a lot of money when we're talking about 900,000, right? That's actually a ton of cash when we're talking about 900,000. You got to think about like, what am I using this money for now? So that's the other big question, is like, do you have an opportunity in front of you right now that you can use? Because as soon as you do the refi, you're actually paying interest on all of that money, right? You're paying interest on the 75 that you just reborrowed. Or you could do a HELOC, which is possible as well, a home equity line of credit, which is more like a credit card. And so you only pay interest on it as you spend. And that's a decent solution as well. But honestly, where my head is at is, if you've already done a lot of the renovations, or this building is in great shape, okay, why not take advantage of selling it at possibly one of its highest prices, or the highest conceivable price that it may have ever been right now? Sell that building, capture all that value you already added, capture all that forced appreciation, and go and buy another fixer upper that you can actually add that strategic value back into and get that huge lift. Okay, because you might actually be able to get 2 buildings now instead of 1 and have them both pop up to 900,000. Okay, so that's my school of thought on this. And I was in the same position, right? I could have refied, I could have, done that. But when I'm looking around, it's just like, I can't add enough value in here to get it to be worth a lot more. But if I have all this cash, I can move very quickly into a new opportunity where I'm able to do these strategic renovations, where I might put in 50 grand, but the market might value that work at 200,000, right? So all of a sudden I've created out of thin air $150,000 by simply doing some strategic renovations. So that, to me, is worth way more than holding, especially at those rates. If you're getting $1,000 or sorry, it was $2,200 or something on a $900,000 property, that's not going to fly. Okay, you're going to be negative cash flow once we factor in repairs and maintenance, taxes, insurance, utilities, all that other stuff. So, you know, if anything breaks, that's going to be half a year of cash flow at that rate, right? You get a dish. I always bitch about dishwashers. I don't know. I've got a real thing about this, but like dishwashers now are $1,000 after you get the thing installed because you need a freaking electrician to come and do it. Okay. And when the electrician's there, he's also got to bring his helper because they're going to have to drill through the house. Like, it's insane. You could have multiple trades to install a dishwasher. You need a carpenter, an electrician, and you have to buy the damn thing. So by the time you do it, it's $1,000. So if you're only making $300 of cash flow, there's 3 months. That's a whole quarter. Okay. So when you contrast that with buying a new fixer upper and doing the strategic renovations and potentially getting 2 to 3 times what you put in out of it, that is where we can start talking about the compounding effect of how real estate truly does work when we do things like strategic renovations and forced appreciation. So
absolutely. Now, next question that we have here, Adam, that was seconded by Nadia, is from Chantel, and it's, what are indications or signs to watch for to know that there's a change in the market that's coming?
It's really hard to see the coming changes, but like, you know, you can look out for things like when the Bank of Canada announces different like prime rates and stuff. Like when you start seeing mortgage stuff change, that's when you should probably forecast changes in the market. So when all this money became so cheap, okay, when you started seeing mortgage rates go down to 1.8, now they're 1.3, that is when you can forecast an obvious rise in the market. So if you start seeing mortgage information coming up that, you know, Bank of Canada is considering increasing prime or whatever, like you start seeing that type of stuff, that's probably a decent indication that things are not going to go great. The other thing is like default rates. So some lenders will post their default rates. That can be a decent little indication. Like a bunch of people start defaulting, it's probably not going to be good. What else can we look for? Obviously, like broader economic things like pandemics are usually a good sign that there could be disruption in the market. Now, of course, if we're in like opposite land here, which we are, our global pandemic, which really did not help the economy, I'm sure, has stimulated it in a way that nobody's ever seen. So somebody's getting a huge bill at some point, and I don't know who it is, but it's probably my grandkids. So hopefully that'll just fly over us and we'll all be happy-go-lucky with our double or triple masks or whatever we're up to these days. So yeah, I get, it's hard to tell the future though, but look out for pandemics. That's a thing. Mortgage rates.
Next one is variable or fixed rate right now from Tamara. And I guess, Tamara, it would depend on what your goal is. Like if you're wanting to hold on to the property and you're able to get a fixed term at a low rate, that would be fantastic right now because rates are so low. But if you're wanting to flip the property or execute on a short-term strategy, you're not going to want to go with a fixed rate because you're going to have to pay to break out of that fixed rate regardless. So yeah, it really depends on what your goals are here, Tamara. So for sure, if you're looking to hold the place for a while, go fixed because the rates are so crazy right now. It's basically free money.
Yeah, I think the variable, like, if you look at the history of variable versus fixed, variable always wins. Okay. It's never lost. In the short term, it's kind of like dollar cost averaging, right? It's kind of like stocks and how most people justify stock portfolios is like dollar cost averaging. So variable rates are basically the same. Now, with all that being said, again, I just don't think rates can stay this low. So I'm kind of on two minds here. On one hand, I'm like, yep, do the variable rate because then if you want to refinance soon, you can do that a lot easier. On the other hand, I'm like, holy shit, whenever this goes wrong, it could go really wrong. And if it goes really wrong, you do not want to be holding on to properties that suffer from massive changes in the interest rate to hold them. So I guess you kind of have to weigh the pros and cons on that, but certainly the time horizon of your investment is very important there. So if you're going to do a BRRRR, absolutely, it can't be a fixed rate because you're gonna suffer big penalties when you go to break that. Now, that being said, too, there's always loopholes, and mortgages are always gray. There's never black and white, ever. Okay, they're very subjective things, despite the common misconception that they should be black and white. They're just not. And so lots of lenders now are actually allowing you, well, I shouldn't say a lot, I'll get sued by somebody here eventually, but lenders have in the past accepted fixed mortgage products being converted or refinanced in really short periods of time, as long as it was with the same bank. So, you know, for example, I just did this the other day with First National. They had a brand new fixed mortgage that was like a 5-year fixed. And I was like, I just called them and I was like, we absolutely need to refinance this product. So what's the best you can do? And they were like, okay, we'll totally waive all the fees to break it as long as you stay with us. And I was like, sure, yeah, that's not a problem for the client as long as, you know, we keep a really competitive rate. And they gave me the current rate and they refinanced it with no penalties. But who's to say that'll ever happen again, right? So that was a one-time thing that I did as a mortgage agent that worked out for the client. But, you know, you got to be careful with that stuff.
Absolutely. Now, the next question is from Punit. Hopefully I'm saying that right. But why would someone sell to a wholesaler instead of putting their house on market? This is a question that we actually get asked a lot. And there are so many different motivations that we've had from various sellers. So, you know, it can be from anything to someone not having a good experience with a realtor, to someone just wanting to move really quickly, to them just knowing people who do deals off market and just wanting to go through them, or maybe they just don't want to list their property and make it public for personal reasons, or maybe they have a lot of stuff in their property that they don't want other people to see, or maybe their property is in complete disrepair and it's just not something that they want to show to other people. So there's a lot of various reasons that people do choose to sell their property off market. It really varies, and we've seen no slowdown on that front by any means. Okay, next.
I actually sold, of the last 3 properties I sold 2 out of 3 of them privately myself. Okay, so like I do practice what I preach here. The reason why I did is because it was easy. Okay, this for me was about convenience. I generally do dislike most people. So the idea of like fucking public walking through my houses and like arguing with me about some sort of inspection or something, like I will lose it. I will just lose my mind. So when I get and for me, this was the beauty of it, the same way that a lot of the people we buy houses from is like, hey, investor, give me your price. If I like your price and the terms, I will 100% accept it right now because it checks my boxes. Could I go get 20 grand more on the market? Potentially, right? Could I go get 40 grand? Potentially. I don't know. And I'm going to have to suffer through people. Okay. The worst type of animals, people. And they come through your house and they bitch about little things. It's awful. So a pre-negotiated thing is just beautiful. I came with this house. The guy walked through it. He was here for 12 minutes. I kind of know the guy. Met him at a real estate, like meetup like a year or 2 ago. He just had my number, saw me post about it, came over, 12 minutes in and out, boom, DocuSign the thing. It was done. I don't have to worry about a thing. Now, my neighbor sold the next day for way more. And I was like, oh, God damn it. But either way, it doesn't really matter because I got what I wanted, which was speed, convenience, and an easy sale. So that's generally what happens there. Absolutely. One question I'll answer right now while I'm still chatting is Dimitar asked, how can newcomers compete with you? First of all, we have no competition, so you won't be able to compete with us. But if you want to work with us, we're really good at collaborating. So if you guys have deals and you don't know what to do with them, just bring them to us and we'll be able to help you out. We generally do joint ventures with people, so we'll do 50-50. We don't mind sharing, right? So you bring a deal, we'll bring the might of the whales as you referenced us. The whales are controlling the game. Yes, we are the whales in the game, and that's okay for you because we can help you win as well.
Absolutely. We love working with other investors, other wholesalers. So definitely reach out to either Adam or myself. Our Instagram handles are on the screen here. So make sure you follow us on Instagram and reach out. We love connecting with you guys. So get your phones out, take a little photo too of the webinar tonight and tag us in it. And we'll hit you back. We have another question here, and I do just want to touch on the question about why would somebody go with a wholesaler off market too? We actually see a lot of people just posting for sale by owner, and there's other companies that exist where owners do their own negotiations too. So some people just like having that control and not having it done through an agent. So that's another thing that I've seen is sometimes the sellers just like to have the control and the speed of being able to do those negotiations themselves and haggle a little bit. The other thing is, when seeing homes for sales, do you guys recommend investing in an inspector joining on a walkthrough, especially on wholesale deals? So this is actually a great question, Deshaun, because most wholesale deals end up going, well, all of our wholesale deals anyways, end up going firm when we assign them to the investors. So for sure, I have seen some investors bring inspectors on the walkthrough with them. And there's actually an inspector that I had connected with in Sarnia who came to one of the walkthroughs, and he charged the investor $100 for an hour. There was no paperwork involved, so it wasn't a full comprehensive, like 50, 100 billion page inspection report. It was just a straight up, here's what I see. This is what you're going to have to address with the property yourself. And it was just having that guidance and advice. So if you're newer, then that can sometimes be beneficial. It can also be overwhelming when they tell you all of the craziness that maybe costs like a few thousand grand or like a few thousand bucks to fix rather. So definitely an asset if you have investors in your power team who are willing to join you on that walkthrough, and $100 to have that peace of mind is fantastic when you're going firm on these deals. So it really just comes down to your comfort level there, Dushan. Next question here is, let's just take a little look. Would you recommend hammering down the equity you use for the down payment with rent and work or refinance and toss it all on the mortgage? So Adam, if you want to hit up that question from Jordan.
No. So like I'm never going to pay my mortgage down faster than I absolutely have to. In fact, I'm going to do everything in my power to make sure that I pay a mortgage for longer. Okay. So whenever I can, I'm seeking out 30-year amortizations, more if it's possible. And the reason for that is, why the hell should I ever pay that back? Okay, right now we're getting money at 1.3%, maybe 1.6. And for those of you with terrible credit, 2.2, a whopping 2.2. Okay, don't ever pay that money back, ever, 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 ever. Do you know how long? Well, you do know how long. Pull up your pay stub. How many hours did you go to work for the last 2 weeks to get paid nothing, to get $3,000 or $5,000 or 10 grand, 20 grand a month? Okay, that took you hours and hours, 80 hours of your life to go and get that paycheck. Somebody at the bank is going to sign a piece of paper that gives you hundreds of thousands of those little fun coupons. Okay, those fun coupons are everything that society wants you to have. Okay, when you borrow a mortgage, the craziest shit happens. The bank asks you if you want more credit. They ask you if you want a car loan. They give you a HELOC, right? They literally incentivize you to keep borrowing based on you being able to pay that thing every month. And you'll never be able to get that type of access to capital. And the most beautiful thing about real estate investing in general is its leverage. Okay, we're leveraging real tangible assets up to 5 times your actual input, and even more, right? Because of CMHC and other insurable products, like you can get so much freaking leverage in this industry that it's impossible to control that amount of assets anywhere else for the type of return that we get. Okay, so this is a basic financial equation. Never accelerate your mortgage payments. It makes 0 sense because you're losing all your leverage at that point. Why would you ever do it? In fact, and the other side of this as well, I'm going to take every opportunity to like just massacre that leverage. Okay. So on this building, 100% leverage, 100%, no equity. It's awesome. Why? Because you take that money and buy other buildings with it, do strategic renovations, and that money that never was even yours, it's fake money. It's not even real. The bank made it up. Okay. You're going to take that money, go do strategic renovations on another building, get that massive lift through forced appreciation. Now you've got real money that's actually yours that you can sell that building and hold on to. Holy shit, we just created hundreds of thousands of dollars out of nowhere. Okay, it is literally, it's the most magical thing in the world. Other than compound interest. I think, I'm not sure who it was, but saying that was the eighth wonder of the world. This is basically the same thing, okay? So we're basically making magic and miracles happen when we're able to leverage this amount. Okay, I'm 26 years old. I should never have been allowed to control this much money in assets. Never. Somebody is dumb. Somebody is really broken to have let me control that much in assets and then sell it and now have real actual money that I can go to the bank and hypothetically, as long as the economy doesn't crash, they'll give me currency for that, that work that happened. And it was all easy. And I made tons of mistakes doing it. The worst renovations, the worst implementations, terrible contractor choices, awful properties. Okay. Still, the market was forgiving, and that's where we're at. Okay. And now with all those lessons learned, it's very easy for me to take that money and go and multiply it. Okay. This is the big deal. Now that I was able to do the strategic renovations, force that appreciation, capture a bunch of equity, now I can take the 100, 200, 300,000 and 10x it almost overnight. Okay, that's the easiest thing to do. The hardest part is get to that first $100,000. When you get that first $100,000, the first million is actually really easy. Okay, it's so easy to go and multiply that because you can take that $100,000. They'll give you a well, actually with today's mortgage rules, it's actually kind of hilarious. They'll give you stupid money. So they will go and give you, so with 100, you can easily get yourself $1 million of assets. And if you can get a basic return on investment on that $1 million, you're controlling more money than the average Canadian gets in a year anyways. Okay. And when you start doing forced appreciation on those assets, flip them, sell them, it's just the sky's the limit here. I can't tell you how exciting this actually is, but you have to move fast. Okay. The biggest thing, people love to study this stuff. Okay. I teach a lot of people how to do this, and it's kind of absurd how much people love to stare at it and never do anything with it. Okay. The only reason why we're successful and the reason why we built the biggest business in the country, I'm pretty sure, in this industry, is because we just did something about it. Okay. We went out, I personally knocked thousands of doors. Okay. I did thousands of cold calls. I've done all the walkthroughs. We've written over 1,000 offers in the last year. And like, that's how you actually get to these types of levels of activity. And it's so easy. Like, it just takes making a decision. I like here, Shaq asked, you can get a $1 million mortgage with 100K. Yes, 100%. Okay. And again, there's like 5 C's of credit. I always forget the 5th one, but there's collateral, right? Capacity, credit, character. So, and then there's one other one that nobody actually cares about, but those are the main ones. Okay. So if you have $100,000, it doesn't guarantee you can get $1 million, but if your credit and your capacity is good, you've got a job and your credit score is over like 650, 100% you can get that mortgage. Okay. The last thing is the collateral. What kind of building are we buying? If it's anything that doesn't look like it's falling over, yeah, you're probably good for $1 million. Okay. So when you understand that type of leverage, how long does it take you to make $1 million in your active job? Think about that. What are you making? $5,000 a month, 10 grand a month? Okay. I make probably somewhere around that in my active income, 10 or 20 grand a month, depending on what we're doing, excluding commissions. Okay. Because the bank doesn't care about your commissions. They don't care about your dividends. They don't care about all that stuff. Okay. They want to see what you're actually making. Okay. So when I lean on just my T4 income, it doesn't look great, right? I'm only making T4, I think 90,000 is what I pay myself through the court. Okay. So when you're looking at that, not a lot of income, but the bank will qualify you for the craziest shit for that income as long as you have that 10% down and they can insure the product. This is the other thing that's going on in our market that you guys can take advantage of with these prices going crazy, is the banks actually prefer, okay, they incentivize you to put down less money. Okay, and the reason that how that works out is you get insured mortgage products, okay, CMHC insured mortgage products. The bank literally gives you lower rates for borrowing when you add that insurance on. Technically, it makes sense because now it's insured by some external thing, right? CMHC. But when you really think about what that means, you mean I can put down 5% and get a house? Yes, you can do that. And you'll give me the money for less now? Yes. So if I give you 20% down, I'm actually more risky? Yes. What? Okay. This is crazy. It's insane. And this is why we're getting these prices that we're getting today. This is the answer. It's because it's so easy to get money right now. It's out of control, completely rampant. And that's why we should buy right now and flip or burr or do whatever the hell you can to capture this rising wave. Because eventually it will have to fall, and that's okay too, because then we'll buy all the houses that nobody else can afford. Okay, it's fine. And at that point, again, when nobody's buying houses and people stop lending, okay, because that's what happens when your market's crashing. People lose certainty in the market. Money moves out of lending and goes back somewhere else, right? Gold or wherever people want to hoard it. That is when there's no mortgages of it. Well, there's mortgages, but only for the select few that can still qualify. So what ends up happening is more rentals. Well, when there's more rentals, the rent goes up. And again, the investors are winning. Okay. This is literally, it's magic. It's insane. It gets me fired up. You can tell. I'm sweating. So like I literally just started sweating. This shit gets me going wild. But right now is a fantastic time to buy. I'm telling you that right now. So be competitive, be quick, and listen to Rebecca talk to you about the deals that we've got. This is a shame.
Absolutely. Well, I'm just going to get started with talking a little bit about the two websites that you have to make sure you check out. So vacation off-market deals is at www.cottagebuyers.com/private deals. This is how you can opt in to receiving all of our off-market cottage deals. So if you're not already on this, make sure you hop over today. And this is our main private deals buyers list. So if you're not already on it, make sure you get on it. And here are some announcements for you guys. So we are absolutely growing and expanding into new markets. So recently we've hired many new wholesalers to the team, and we also hired a new admin to the team. So we do have more wholesale positions available. So please do make sure that you reach out and apply. You can actually go to www.mattmckeever.com/join my team, and you'll receive a follow-up email with information on how to submit your video application. This is also the link to our Problems or Profits pop-up merch. So this is where you can go, and it's teespring.com/store/Matt-McKeever-merch. So make sure you pop on there. We've even got some swanky masks, very in the times right now. So if you're looking to swag out on those walks, make sure you hop over to the store. Another thing that we have going on too is our Ontario Private Deals Facebook page. So if you hate seeing all of the emails come into your email inbox, which I love because I have some fun with the subject lines and emojis. But if you would rather see the deals on Facebook, this is our private deals Facebook page. We open it up to any wholesalers that want to post their own deals, any investors that want to hop on there and connect with other investors. And we also post our deals onto this page. So if you're not already on it, it's grown really quickly. I think we're at like 2.7 thousand members or something now. So has definitely increased since the last time that I took the screenshot of the page here at 2.3. So we're definitely looking to connect with more of you on the Facebook page. And without further ado, our private deals. So we've got several here. So guys, thank you so much for coming to today's Wednesday webinar and having us talk openly just a little bit about this hot market right now. So one thing that I will highlight before I toss it back over to Adam is make sure that you respond to the feedback survey, because we literally build these topics off of your feedback. We want to only do topics that you guys want to hear about. So This is where you can find us on Instagram at Rebecca Lynn Matheson and at adamjdmartin. So thank you guys so much for attending today for the hot real estate market. Adam, if you want to close us out.
All right. Yes. Thank you so much, guys. I do appreciate all of you that stayed right until the end. There's 37 of you that were crazy enough to do it. So I do appreciate all of you. If you guys want to follow us, hit Rebecca up at Rebecca Lynn Matheson. I'm Adam J.D. Martin. You can find me there on any platform. I'm also going to be posting this recording on my YouTube channel. So it's youtube.com/AdamJD Martin. And you can find all of our previous webinars there, as well as look forward to seeing us back here every single Wednesday. We don't ever miss one. So every single Wednesday, we will be here with a new topic. So stay tuned next week for another new topic and we'll have another cool discussion. But do appreciate all of you and really do hope that you take what we talked about tonight and implement it. Please, for God's sakes, do something with it. I promise you, you will not regret it, even if it goes terribly wrong. Okay, even my worst projects, my worst investments have taught me so much about real estate and allowed me to move faster into my next one. So thank you all for attending and we will see you next week.
See you guys.